Disclaimer, Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. We are recording this presentation. The recording will be made available to our VIP members exclusively first over the next few days, and then by next week, we'll put it up on social media. Those of you who are watching our recording on YouTube, what is a story trade? And who pinged me there? I gotta quiet that little sound, but understand story trading is a practice of understanding market pricing through the 4 pillars of fundamentals, catalyst, sentiment, and technicals. We collaborate now in our WhatsApp community and on Zoom. We have an app that's in private beta testing right now, which will be the place to discover, collaborate, and validate market moving information through crowdsourced research and social collaboration. Make sure to sign up for our app on our website at StoryTrading.com. You can also check out our VIP picks there in the menu, and what you'll see if you go to VIP picks is Akhil, who presented. We'll get to that in a second, actually. What you'll see is something pretty cool about Akhil. But first, if you have a new VIP pick you want to let us know about and you're not part of the story trading community, you can do that by going to StoryTrading.com/submit-VIP. Actually, our VIP members, if you do that, that helps us out as well to be organized. But all right, we got a new VIP pick here. It's GlobalE, GLBE from Akhil. But I want to point out his last VIP pick, Matterport, MTTR, was up 52% in 16 days, and he very skillfully closed Matterport close to the high because it was overvalued, and actually criticized him a little bit at the time. I'm like, how about sentiment, man? Maybe we'll hold it open a little bit more because sentiment's real high. It did go up higher on some, I think, an Amazon deal, but given the market frothiness, that was the right decision to do. Akhil, you locked in for our tracking, a 52% gain in Matterport. So GlobalE, GLBE, we've been talking about this stock in our community for a couple of months. There's been a lot of interest in it. The stock closed at $58.89 on Friday. Before we turn it over to you, take a look at the chart. Here is the chart of GlobalE. It's actually held up incredibly well over the last few weeks. And I've actually been adding, one of the few stocks I've been adding in the last few weeks because of the relative strength compared to other growth stocks. And also the market cap seems very low to me compared to the opportunity. So I'm very excited to talk to Akhil about that. So when we look at charts at Story Trading, we try to evaluate these charts through the 4 pillars of, there you go, sentiment, catalyst, fundamentals, and technicals. So that's what we're going to be doing. We'll hear the presentation from Akhil, and this will help us understand the full picture of GlobalE, GLBE. I'm going to stop my share right there. And Akhil, you're welcome to take the floor and share your screen.
Okay, thank you, everyone. Let me just share my screen. Let me know when you can see the screen.
Yep, we see it.
Okay. Hey, hello, everyone. Good morning, good evening, wherever in the world you are. We are all living in a global society nowadays where the boundaries are stretched beyond the local timings. And I took this theme because GlobalE, the company, the ticker symbol GLBE, the full company name is GlobalE Online, is trying to do something like that on an e-commerce scale. So, oops, something from my work site came up. So let me just close it. Okay, so little bit of a disclosure. I am long GLBE. This is not an investment advice, so just something to take care about, more for knowledge and knowledge sharing purpose. Okay, so with that, let me go ahead and first explain what GlobalE does. Okay, now this is a very interesting company. Think of something like, if any company wants to go and sell an international market. Imagine the scale of problems it runs into, right? There are language issues, there are currency issues, there are tax, etc., import stuff, right? Shipping, various things that you have to set up if you want to go ahead and launch something internationally, right? And what I think GlobalE is trying to do is it has created a platform which enables customers. Can you just hold on for a second?
Yeah, no problem.
We have a 15-month hold at the home, so
no problem.
All right. Okay, so I was talking about the scale of problems when you are trying to sell something international as primarily a domestic seller, right? And what GlobalE is trying to do is take those things out of the equation if you are trying to set something and sell in an international market. Okay, and that's why it is a win-win situation. Okay, I've just shared this video link in the, which if we have time, I'm going to play it in the end. But this explains a little bit of the complexities that they are trying to solve, which I'm also going to tell a little in the next few slides. Okay, so these are some of the challenges, right? When you are trying to go sell something international, you got to have that messaging in the local language. Okay, GlobalE's platform right now has 25 plus language in which it can help customers sell. Okay, when you go in different countries, you need to take care of their currency, right? The conversion, etc. You need to take care of local payment methods, right? We have e-wallets, digital wallets, credit cards, debit cards, cash on delivery is very popular in many parts of Asia, right? And I mean, you need to, these companies who are trying to sell something, they can't really deal with a lot of these problems, right? Local import and duty, right? Multiple shipping options, returns, right? Like returns is a very big thing for all of us who are trying to buy something online, right? Then there is payment fraud, and of course, local market know-how. So so this company figured out that, hey, if international organizations want to go ahead and launch international operations, they are going to take care of all this stuff for them, so that the company, and they take a percentage of the revenue from these companies to have all of these services delivered to them. And these companies can actually just sell anything seamlessly across the globe. Okay, so these are a lot of pain points that they are solving for these merchants. Okay, here is a list of some of the biggest merchants they have on their platform. So you see a lot of luxury brands, right? Marks and Spencer, Montblanc, Marc Jacobs. A lot of these companies have international audience, but they didn't know how to sell to these customers without getting into the solving this problem, and they have gone ahead and done that. But this is not just the exciting point, right? This is something that they began with, and I think the investment thesis is much bigger than what I have mentioned. So on their website, I'm then taken this screenshot from their S1 statement, because this company was IPO'd earlier this year. So they mention this as a very large TAM, right? About 736 billion of market, right? E-commerce penetration outside of a domestic country is only 5 to 10% at max for any multinational. So imagine the scale of opportunity if you improve operations for merchants to go and launch international, right? The cross-border, as they say, cross-border e-commerce is growing at 2x the domestic e-commerce rate. Okay, I mentioned only 5 to 10% merchants sell international, so this is a very large addressable market to address. That is a redundant. Very high growth company They are growing at between 50 to 100%. I'm going to share the financials soon. And their margins are also continuously improving. So they started with about, I think, 27, 28% gross margins a couple of years back. And the previous quarter, it has risen to about 40%. And the management is aiming for even higher margins. Next comes the exciting part. Their partnership with Shopify. We all know what Shopify has done for e-commerce and enabling small customers in the field of e-commerce. So Shopify actually owns 6% of the company as of today, with an option to actually increase it to 15% with all of the warrants that they own. So definitely that tells how much Shopify values this company as a partner and as a complementary product to their offerings for their customers. They have also announced a partnership with Facebook, again for their international Facebook for business. So they have had a few partnerships, and the partnerships with Shopify and Facebook, these have not even started to take place. They have just announced it a couple of quarters back. So in their last quarterly report, this was not even reflected. Okay, so something to be really excited about for future about this company. Okay, I wanted to pause and see if there are any questions at this stage, and I want to talk about the 3 important points that I feel are really important from a financials point.
No, it's a great presentation. I'm taking some notes. I'm gonna hold my questions for the end though.
All right. So wanted to put together a few more points. So their financials are pretty stellar, right? Their take rate is about 17 cents per every dollar of GMV sold. GMV is gross merchandise value. So if they sell $100 worth of product, they take $17 of it. So that's a pretty big percentage of the cut that they are doing, and the companies are probably happy to pay this. Okay. I want to explain these two teams. There is this gross dollar retention rate, and then there is a net dollar retention rate. Okay. So the gross dollar retention rate and net dollar retention rate are terms used normally in the software industry, primarily the SaaS business. The gross dollar retention rate, that tells how much without any upgrades, that is for a current customer, if he has taken no upgrades, right? So this includes churn and business lost. Okay, how much on average is he paying the next year? Now, a percentage of greater than 80 is considered really good in the SaaS industry, from what I have researched. They have the gross dollar retention rate at 98%, which means that the customers without any upgrades are almost actually, paying them at least what they were paying last year without any upgrades. With the upgrades, with more services that they sell, that amount rises to 140%. That means a customer who is taking additional services, if last year he was paying $100, this year he's paying $140. Again, in the SaaS world, I mean, people who invest in high growth stocks, they know this figure. If it's greater than 100%, it's considered good. Over 120, 25% is considered exceptional. So really, I think, these 2 or 3 points really stood out to me when I was looking into actually their S1 and their presentation. So some of the other value propositions, they say that if you have, they help increase your sales conversion up to 60% more, right? They reduce all the complexity. They have something called a global smart insights tool. So just for the year 2020, about 367 million visits were paid across 400 merchants. So there's a lot of data, and they provide data and analytics to their customers on how to improve their messaging and XYZ things. I mean, you could do a lot of things with that data, and that is something that they provide along with all their services for their merchants. So these were some of the value propositions of GlobalE. I did want to share something with you. So this is their partnership with Shopify, right? And Netflix is one of the first customers who's onboarded. Netflix is based out of a Shopify platform. And if you go and see this is the Netflix store. It's primarily based out of the US, but if you go in any of the countries which they are selling their product, I don't know how much these are like 30, 40 products, maybe the countries. So if you really go down, they mentioned that transactions outside of the United States are processed by GlobalE, right? So this is a Shopify, actually, this is what the Shopify partnership is actually giving access to these large customers, the top 1, 2, 3% of customers for Shopify who are trying to expand internationally. And that partnership is probably with Shopify is going to help reach that. And Netflix is one of the first partnerships that they actually talked a lot about in their presentation. So I actually went and saw their Netflix page, and this is what I saw there.
Very nice.
Okay. Some financials I wanted to get into. So this is their revenue growth, right? So we see since they went public and what they have shared, revenue is growing pretty steadily. Their base was pretty small. So, you see, I mean, it's really high, the revenue growth. They are projecting similar growth for the next few years as well in their guidance. Their gross margins I was talking about, it's went up from 30% off to about almost 40% right now, and management is guiding for even more. So, you want to see this. Their cash on their balance sheet is about 500 million. It's pretty good condition. There's no debt on their balance sheet. They have EBITDA margin. The EBITDA margin is negative right now because of amortization of warrants they issued to Shopify. I need to understand how that affects the EBITDA margin, but apparently, I mean, right after the quarterly result, the stock did not, take a beating. So this is something they explained pretty well in their conference call. Okay. So here comes the valuation part. It's I'm taking right now it's trading at about $58 and at a market cap of 8.5 billion. The EV to sales ratio for this should be trailing 12 months is 36, and this should be NTMs. I'll correct that. The next 12 months is 26. So it's trading at a rich valuation for sure, given even in the current environment. They are expecting revenue growth for 50% plus in the next 2 years. The gross margins are improving. The dollar rate net is improving, and they have a positive EBITDA margin, which is rare in a high growth software company. We all know that, they probably just invest all they are getting into their business, and they remain negative for many, many years. But this company is already positive EBITDA, which is a pretty good indicator. Okay, I've done some. This is just a metric to show how other software companies are trading, at what multiple. This multiple has gone down quite a bit in the last month with the correction in the growth stocks that we have seen, right? So, so this is just a simulation that I did, right? And these numbers are all in thousands. So for the next year, if the company grows by 30%, right? If the revenue growth is 30%, 40%, or 50%, how much, and with price to sales multiple of 20, 30, 40, and 50, how much would the valuation of the company be? Okay, so this is the best case scenario, right? If it is growing at 50% in the next 2 to 3 years, and it's trading at a pretty rich multiple at that time, it would it would be almost like a 10x from this place, right? Right now it's 8.5 billion. This is 59 billion. So this is the, I mean, I hope that I get to see this, but then there are other scenarios that we can look into. So depending on basically, I mean, the market, the sentiment, we can probably think that it's going to, with positive revenue growth and a decent multiple, it's, I mean, at the lowest, it's probably going to trade at about 6.1 billion, which is, I mean, a 20% correction from where it is. So I see a side on this company. That's what I wanted to indicate through this. Okay.
Great. Got it.
Wanted to just talk about the founders and the management team. So the founders are, I mean, there's nothing to kind of, really get impressed on. Like they're not like, serial entrepreneurs or Stanford or Harvard grads, but they have pretty good pedigree. So the founder, it's an Israeli company. I should have mentioned that in the beginning. So Amir Shlet, is that how you pronounce? Co-founder and CEO. He has a pretty solid background. Before founding GlobalE, he served as SVP and strategic advisor to Bank Hapolim, Israel's latest bank. So this good pedigree. The CEO and the co-founder Shahar Tamari, he served as VP and payment heads of 888 Holdings, one of the biggest gaming companies in the world. He also worked at Bank Hapolim, so that's where probably these guys had a partnership. Their CEO in Europe, he has had a pretty distinguished career with DHL. So, a decent, I think, management. I really liked that 32% of stocks are owned by the insiders. That's a pretty good number, and about 52% are stocks are held by the institutional investors. And this company is only about went public about 5 to 6 months back. So a pretty good chunk of the float is held by the institutions, which is good to see. Okay. Of course, some risks. I think it's trading at a pretty rich valuation. I was comparing it to some other high growth e-commerce companies such as Meli and Mercado Libre and C Limited. They used to trade pretty richly, but now they are trading between 10 to 20, their price to sales ratio. But they are pure e-commerce companies, right? So their margins are also a bit lower than these companies, okay? Because they have full-fledged operations versus GlobalE, which is providing a software solution along with some sort of solutions on delivery and etc. too. So that they're certainly richly traded. There is a decent bit of competition. I have to be honest, I have to research a little bit more on the competition, but nothing that I could research that actually tells me that any other solution exists that what GlobalE is actually offering. If that existed, probably Shopify would have had partnerships with them previously, but I think just that partnership with Shopify and Facebook just tells on to show that how much confidence these companies have in the operations and execution of GlobalE. The merchants could build their international operations themselves. So companies like Marks and Spencer and etc., they could build their own international operations. that's certainly a risk. The direct to consumer business model is actually getting started, and maybe some more companies get into that model. Amazon or Google, if they decide to get into that, these, I mean, this company could fail big time then. But so those are some of the kind of like risks I wanted to highlight. Any questions before I move?
No, I'm good.
Yeah, I'll save my questions for the end.
Okay. So, so to be honest, I think I don't know what the stock price is going to be in the next few days. There is a lot of correction going on in the market, right? Already a lot of stocks have come down from their all-time high. So, but I think this company has got what it takes to be a multi-bagger. Okay, so it has partners. Some of the catalysts that I could think of is their partnerships with Facebook and Shopify, which is really just starting, right? I showed the Netflix store. This is their first store that they have launched in partnership with Shopify. They also acquired a company called Flow Commerce recently, and just on this news, the stock went up 20%. Like I think 10 or 15 days back. This company actually enables very small SMBs to launch internationally. So they have some kind of like a high-tech software solution, and they also had a partnership with Shopify. So so this company was acquired. They have also announced another potential acquisition early next year in their earnings call. So those are some of the catalysts that I feel. A negative catalyst I should have added here is just right now there is a lot of negative sentiment around the growth stocks. So something to be aware of, right? Sentiment, I think it's decently covered on Twitter and Seeking Alpha. On StockWits, it just has about 2,500 people on watch. So not too much covered there. The earnings was pretty exciting with growth of 70% and margins expanding. And also the acquisition of Flow Commerce was pretty, I think, taken in a very positive way by the Wall Street. A lot of jobs open at GLBE. I was actually looking to see if I can actually apply there myself. About 75 jobs open there out of, with about 350, 400 employees. So they seem to be expanding pretty heavily. And of course, the CEO mentioned a potential acquisition in FY22. So a lot of good positive stuff going on, except for the negative sentiment around high growth stocks. I am not a chart expert, but just wanted to show this. This company was IPO'd at 32 back in June. Steadily went up till about 85, 86 before there was a little bit of correction. And as been pointed out in the beginning of this presentation, it has actually held itself pretty well compared to a lot of other names which have just went on from this to this to this. So I don't know how to interpret, what's going to happen in the next few days based on technical charts. But I would recommend that, my recommendation would be to start maybe a small position and then see how it goes in the next few days if you are really interested in the company, and not go full out, especially in this uncertain environment. And these are just my final thoughts. I think this has, the risk to reward ratio should be pretty good on this company. And I think it is one of the companies to look for in the next few years. So
awesome.
That is where I end.
All right, great. Akhil, thank you so much for that presentation. Really, really good presentation. I have a couple observations regarding sentiment. I think you can probably summarize sentiment with one line: is this the next Shopify, right? Same sector, right? Similar sector. And if you look at the Shopify chart and market cap, I mean, it's just off the roof insane, you know, how that stock has been doing. So I think that's what's driving interest in this, especially because not only do you say, hey, is this the next Shopify, but what do we have here? Shopify actually owns a percentage in GlobalE. I mean, that's pretty spectacular set of facts for sentiment. I think that's where the positive sentiment is coming from. You know, you're definitely right to point out the risks in terms of growth stocks and what the heck's going to happen with them here. You know, and valuations and playing that relative valuation game is always dangerous. So something to be aware of. That was interesting you pointed out, which I didn't realize, that they're already profitable on an adjusted EBITDA basis, which is really, really rare for a stock that's growing this fast with this big of a TAM. So I found that pretty fascinating. I had two questions for you, or maybe three. First question is, why? I'm trying to understand why Shopify is investing in them rather than doing it themselves. Like, what's so special? Like, what? I mean, Shopify is such a huge company. Why can't they just recreate what they're doing for a lot less than the market cap of Shop?
Yeah, so
I'm sorry, of GlobalE, market cap of GlobalE.
Yeah, so I think for this, we want to understand a little bit more about what Shopify does. I'm not a stock, I missed the board on Shopify, but from my understanding on Shopify, I think Shopify enables customer to go ahead and launch their products and sell online very easy, right? Like within a couple of hours or days, you could set something up using their software, all on the cloud. But there are a lot of other nuances when you are trying to sell something internationally. Okay, I think I did mention some of these pain points that GlobalE is trying to solve. I think Shopify doesn't want to move away from their core expertise, which is helping customers sell online in the best possible way. That is probably their mission statement. I'm thinking, I haven't looked it up, but I believe it should be very similar. But I mean, some of these stuff, if they probably do, it's going to take away their core expertise away from it. I think, and that is probably why the main reason they don't want to, they want to just partner with GlobalE, and they have taken a small percentage of the company for now. Who knows, they might want to buy it later on after seeing the execution. But I think that is what I feel, and I can research and get back to you more on this.
Okay, great. There's a chart of Shopify, by the way, for those of you who may not be familiar with its performance. And it's a massive, I don't have the market cap in front of me. If anyone knows, just throw it in chat, but it's a very large market cap as well.
I think they are about 160 billion right now.
Okay, all right, great. Two other questions I had is, I just want to understand this Facebook partnership a little better. It said it's with Facebook Business. Like, what is it? What is it that Facebook is selling through? Is it software? I mean, are they selling? Is this only for like physical goods or digital goods as well, or?
No, so if you see Facebook, it's probably not available in the US, but Facebook is setting up shops using Instagram and Facebook for business on their platform. So you can actually just buy things from, I mean, there's a marketplace out there, right?
Mm-hmm.
If you go to the Facebook app or the website, I mean, people have set up their shops, right? Where you can go ahead and buy. So similar to Shopify, they are, and Facebook also partners with Shopify, by the way. So customers can actually just create their shops within Facebook. And I think it just gives a social way of like buying stuff, right? Like people, friends, etc., can review stuff.
I see.
Right. So for their international operations, which is what they call Facebook for Business, they have partnered with GlobalE as their preferred partner for taking care of all these pain points. Because I mean, for them, I think their main proposition is a lot of people are already on Facebook. They can just create their shops on Facebook and buy on one click. But once you buy, how does the other things take place, right? They also probably don't want to get into the operations part of it or trying to solve this problem, which GlobalE has already solved in the last 5-10 years.
Okay, got it. My last question before I turn it over to Jared, 17 cents per dollar is what they're charging. I mean, that seems astronomical for, retail goods. I mean, margins are typically very low, aren't they already? Like 17 cents. Help me understand why it's worth 17 cents.
So it did look high to me as well. But when I see a lot of stuff that, that international shoppers want to buy, they're a little high priced products probably, right? So one of the highest selling items on GlobalE, using GlobalE's platform is on the Marks and Spencers. There is a cast iron skillet that is very, very popular and people buy it globally, right? That skillet costs about $60, 60 pounds in the US, and in UK, and when it comes to the US, it's about 80-90 bucks or something like that, right? And then you see some of these luxury brands as well which sell, right? Some of the football clubs like Leeds United, Arsenal have partnered with them to grow their international audience, right? So people, I'm a big Liverpool Football Club fan. If people don't already know, I want to buy stuff from the UK, but it is just expensive, right? But if you are a fan, you want to buy stuff. These are a lot of what they are probably selling is a little high revenue and high margin already. So, and some of the problems that it's helping these companies just expand their TAM like multiple times. So that's why it seems that 17 cents might seem high, but in terms of what they are bringing in for their customers, right, and for the services that they are providing, helping increase their TAM, it's probably paying off. And that's why the dollar net retention rate and the net dollar retention rate and gross dollar retention rate is so high. So I think that speaks to itself, right? That the company, that it commands such premium, and yeah.
Okay, great. Jared, I'm going to turn it over to you. Do you have any questions?
First of all, 17 doesn't seem that high. I mean, Amazon charges 30 for some digital goods, right?
Digital, yeah.
Yeah, so I don't know. I think 17 is okay.
I'm sorry, 30 is what Apple and Google have been charging. I don't know about
exactly.
Amazon.
So yeah. First of all, I want to say great presentation. I like the fact that you included both the pros and the cons. It's really important for credibility and everything. So yeah. If you could we pull up the chart again that either you showed or can Ben pull up the chart for GlobalE?
Yeah, probably Ben's chart is much.
The stock chart, yeah.
Yeah, I wanted to say something because
sure.
This is important to. There was a conversation that was happening in the VIP community, and somebody said, by definition, if a company is good and the stock goes down, that makes it more attractive. And I said, I disagree. And the person said, how can you possibly have any way to value a stock if you like the stock and it goes down and that doesn't make it more attractive? And I said, because, one of the 4 pillars is technicals, and there's things like relative strength. There's things like, trying to identify the next generation of leaders, et cetera, et cetera. And I tried to give this explanation, but I think this chart can explain it far better than I ever could. Look at what's been happening over the past 30 days. As all these other growth tech companies have been slaughtered, this company has managed to stay put, right? Ace has managed to have incredible strength. And what I said at the time was, I said, during a crash, everything's on sale. And so you want to ask this question, when everything's on sale, what are people buying? Are they buying the stuff that fell the most because it's the best deal relative to its all-time highs? Not necessarily. Sometimes they're buying a company that didn't even go down that much just because there's that much confidence there. And what this chart is telling you is that there's a huge amount of institutional money which is very, very confident in this name. They're willing to buy it. They're willing to keep it from falling like everything else was falling. So I really, really think that like the strength of the price is a plus. It's not a minus.
You really see the divergence there starting on November 15th. I'm comparing it to ARK.
Yeah.
And you can see here, November 14th, that's when I really noticed that as well. You can see ARK down 17% since then. And man, if I could put this in since November 14th, I guess this is up. Yeah.
That really shows you that this is where the smart money wants to be, as opposed to ARK, which has probably net outflows. People are selling it. So yeah, I think that's definitely something to consider in terms of a short-term consideration. So yeah,
I actually, let me bring up
sure.
something to be careful of too, is since this is a recent IPO, you got to watch the lockup period expiration. I don't know when that is.
It's already past that, Ben.
Oh, great. Very nice.
Yeah. So the dip that you see in I think November end or yeah, where it reached about 45-ish, that was the lockup expiry. Yeah.
November 10th?
Yeah.
Oh, beautiful. Wow, it was only a one-day hit. Okay, cool.
So I had a question. What is their number one country in terms of where they do business? Is it Israel or is there another country where it's like their number one country?
I should have looked it up, to be honest. I did not look it up. I will get back to you on that.
Okay, but it's not China, right?
No, it's definitely not China.
Okay, yeah, I don't have anything necessarily against China, but if a country is overly reliant on growth from China, I always ding a little bit because there's a lot of uncertainty right now with China. So if they're able to do international growth, but not necessarily rely on the Chinese market, I think that's definitely a plus.
Right, and I think if you consider, there is another company called Farfetch.
Mm-hmm.
If you've heard,
partly owned by
Alibaba, and they sell a lot of luxury goods online to very, very high growth, very profitable as well. But they have a lot of exposure to China, and it's not been massacred, but it has not been fairly valued probably compared to what it should be, just because it has China exposure.
Yes, and I don't necessarily like that's the whole conversation. I won't derail your great conversation on that with that, but yeah, it's good to hear that they're not overly reliant on that market.
Yeah, but I will get back to you on that.
Sure.
What is their biggest?
Okay, we have a question from the audience from Sanjay Jain. Can you share some insights on the business operations? How can GlobalE provide the cross-border common services cheaper than if a business were to operate it on its own?
Yeah, so I think if a company goes all-fledged full on with all their operations in a country, I don't think then GlobalE can provide value to them, right? So if tomorrow, let's say, Liverpool Football Club, let's say, for example, they start to have their full-fledged online e-commerce operations in the US, probably GlobalE cannot help them too much because they will take away a lot of percentage of revenue for every dollar they sell. But but if Liverpool Football Club does in fact have to sell in the US, and sell to more customers than they ever can on their own, GlobalE is one of the best ways for them to actually grow their business here, because GlobalE now takes care of a lot of pain points, which I had mentioned. and take care of them. So, I mean, and that is one of the risks, right? If one of the big actually merchants decide to go on their own, then GlobalE is going to lose their business. So that's definitely one of the risks that that the company carries.
Okay. Great. So with that, Akhil, that was an awesome presentation. We're pressed for time, so we're going to end it here on this presentation. Oh, if there's time afterwards, if people want to hang out, we can play that video. All right. So just hang on for that. But first, I just want to let people know you can collaborate in the GLBE research group. That group's actually been open for a few weeks since we've been talking about this stuff. You can find that link in the VIP room. And you can check out our upcoming events this Wednesday, 4:30 p.m. Chris Hampton is going to be schooling us on SPAC warrants. So that's a very complicated, opaque area, which we need to really get educated on. I can't wait for that this Wednesday, 4:30 p.m. SPAC warrants. Make sure to follow us on YouTube and Twitter at /storytrading.com. And with that, we're going to move over to our trade of the week and also the January effect stocks. We'll talk a little bit about that. We had the event last week, and if we have time, we'll look at that video that you had, Akhil. So thank you very much, everyone. We're going to end the recording here.